Financial Planner, follow us on YouTube.
Chief Market Analyst at ITM Trading. Lynette, thank you so much for your time today.
Well, I appreciate this, Elijah. I love doing the interviews, so this is great.
All right, now I'd first like to discuss the economy. Now, you've said we're in danger of experiencing another 2008 style collapse. Can you expand on this?
Well, the system has been pumped full of central bank money. In fact, those that are doing QE, and actually more, all the central bankers have bought a fifth of their government's debt, and that's unprecedented. Globally, that's unprecedented. So they're now talking, and that's all it is talk, about running off that balance sheet. And frankly, since they're the ones that are supporting the market, I don't see how they can do it.
Definitely. And what are some of the other fundamental reasons you see the economy is about to collapse?
Well, we have the stock markets at the second highest valuation in history, second only to what happened with the NASDAQ bubble in '99. So there's no good price discovery. Going back to these central banks, if a free market actually takes hold, it would overwhelm their ability to continue to manipulate the markets. And frankly, they are not fully in control. This is the VIX chart on the 10-year Treasury, and that's the bedrock of the entire global financial system. And it's pretty easy to see on this chart. They just started tracking it in 2003, where you had dashes, which means easy price discovery. I mean, if you wake up in the morning and you're going to buy or sell a 10-year Treasury, you pretty much knew what you were going to pay for it. When the crisis hit in 2008, that was really a fatal blow. And that's what caused all the central bankers to do all of these experiments with quantitative easing, which is just new money printing out of massive amounts of debt. People like to say it's out of thin air. Well, no, that's where we're headed. But at this juncture, it's still based on debt. So you can see in 2008 that this is where we went on life support. And then in 2013 is when the traders actually took over this market. So, really, how did 2008 work when we had the banks doing derivatives and all this funny business? Not real well. Well, we're more deeply into it. In addition, a lot of the things like the CDSs, credit default swaps, against this huge mountain of corporate and government debt, that has had a significant increase over the last couple of years. It kind of went hidden for a while after 2008 because that was specifically the CDSs were the reason that 2008 erupted. But a lot of the behavior that led up to that is in play again. So, yeah, and are we better off? No, we're worse off than we were in 2008 because now, how much more debt can they grow? Everybody thinks that it's unlimited, but the problem is the confidence. The banks don't have any confidence in each other. They don't loan each other money anymore. The central banks knew with the Swiss surprise in 2015 when Switzerland made a commitment and then bam, 2 days after they made the commitment, they broke the commitment. So central banks know that any central bank will do what's in their best interest. So it's just public confidence. And that's really the only thing that's holding this system barely together is that thin sliver of confidence that the public still has in the markets.
Now, you've said that this collapse could happen by the end of the year. Is that still your view?
Frankly, with how rigid these markets are, I think the collapse could happen at any time. It's a function of being in the proper position. So yes, I would say that it would not surprise me to see it happen before the end of the year, though I don't think that they are fully quite ready yet with the next money standard. So that could possibly buy us some time. But where you hear my hesitancy is really because of that confidence piece. If the normal public looks at their 401k statement or their IRAs, because that's where really they hold most of this stuff, if they look in their retirement plans and they go, I'm just not comfortable with this, and a lot go to sell, I believe that will overwhelm the central banker's ability to keep it afloat, and they will shut those markets down, because that's going to trigger a huge derivative event that if it happens too quickly, they're not going to be able to cover that up again. I don't see how they can. So yeah, I think we're really vulnerable in here, very vulnerable.
Right, and you've said with regard to financial assets, if you don't hold it, you don't own it. And you've said that, pensions, IRAs, 401ks, anything that's in the system is at risk. Absolutely.
Because it's been leveraged. Well, first of all, you don't own it. It's owned by Seed and Company, or DTC. And DTC was set up in the 70s to dematerialize all assets. Well, the assets that they're referring to are fiat money assets, though over the years, they've created derivatives on many things like REITs, real estate, trusts, and those kinds of things as well. So because you're not the legal registered owner, that's going to be either Seed and Company and DTC. And you can go on the SEC's website if anybody particularly owns a stock or a bond or anything like that. You can pull it up on the SEC website and you can see who the legal owner is. But that's what I said, when there's a big rush because of all the leverage in the system, your wealth is going to evaporate into that black hole. This is the fox watching the hen house and eating all the eggs right along the way, but you think the eggs are still there. They're not really there.
So what do people do if they'd like to prepare for the coming crisis?
Well, this is something that I think about a lot. And like yesterday on our YouTube channel, somebody had asked me to do a piece on Greece. And I've been following Greece, as many people have, since it went into crisis mode. So I wanted to do that. And, what I did was I took the 14 austerity packages that they've put together between 2010 and 2017. And it was really easy to see that if you're a Greek citizen and everything is held in the system and they say no, you have no access. And so even things that are outside of the system, they're trying to get into the system. But when you ask me what people can do, you can go be as self-sufficient and private with your wealth as possible. So that means physical gold and silver in your possession, that in barterable form to sustain your standard of living. And in my personal opinion, I like the kind of gold that the guys that write the laws write for themselves. So I personally am a big advocate. My personal holdings are in numismatic coins for this function, for growth, to take advantage of what happens during these transitions. So that's what you need to do. Food, water, energy, security, barterability, wealth preservation, and community, which is what we're doing right now, is the community piece.
Can you tell us a little bit about that?
Well, knowledge is power. And just because you don't know about something, people think, well, if I can't see it, then it's not happening. But ignorance does not make you immune. It just leaves you vulnerable. So a lot of what we're doing in here is getting that information out so that people can make educated choices that actually supports their best interest, and doing it while we still have that choice. So, part of it is that taking wealth out of the system, holding it yourself, making sure that you and your family can eat, and you have a community, both local for short-term things like I have chickens. That means I can barter eggs with a neighbor that maybe can climb up and trim my palm trees or something. But having something to work with during these periods of time that are completely out of the system. And I'll say something else too, because I've been thinking about this a lot, and I will think about this a lot more as we go through. But my sister and I like to hike the mountains. And usually on Sunday mornings afterwards, if I don't have, if I've gotten enough other work done, we'll go for breakfast. And we did that last Sunday, and there was a notice on the front of the menu that said that on September 1st, they were only going to accept cash, and there would be a free ATM machine in the window. And both of us said, this is awesome. We are totally going to support this. So as a community, number one, we can use, at this juncture anyway, and if we can get this big enough, it's going to be harder for them. We need to use more cash and to support those businesses. So I don't know if I can do this, because this is kind of a plug for them. Their food is fabulous. This is the original breakfast house on like 32nd and was it Greenway Parkway if you happen to live in Phoenix. But I think there's another business in Mesa. So if you're going in to buy something, use cash. The retailers get to keep more of that because of the huge fees in the banking system. And, maybe start a garden or work in a community garden, but do those kinds of things that make you not dependent upon the typical services. I mean, that's what we can do. And we can come together as a community like we're doing now too, to get that information out there. But I think that's what we need to do. We need to think about that and vote with our purses. If you keep using debit credit cards, if you keep using cyber, if you keep all your wealth in the system, well, what do you do when the system says, no, you can't have it back?
That's really interesting, getting people to use cash more to get their money really outside of the system. Now, some people would argue, well, isn't cash still kind of part of the system in a sense that, it's a fiat currency. The government says it's money. It's not something that is real money like gold and silver that has intrinsic value.
You're 100% correct that it is definitely part of the system. But you see, what cash really is a debt instrument with a zero coupon interest. In other words, it doesn't pay you interest, and it doesn't, at least at this juncture, charge you interest. So using cash eliminates the government's ability to go negative because they've already removed, officially, according to the Federal Reserve, more than 96% of the value out of the dollar. However, they need to now start to attack your principal by going to negative rates, and they're trying to get rid of the cash and keep you in the system because then you don't have any choice about it, and they can push a button and they can charge you as much as they want. So while you are 100% accurate that fiat money is part of the system, it's based on debt and it's a debt instrument, it still is outside of the system insofar as, number one, if you go into, like in this example, it was a restaurant, or you go into any store and you use cash, number one, the merchant gets to keep more of that money because they don't have to pay the fees. And number two, the more cash that's used, the harder it is to go completely digital. They want us to volunteer. A Visa and MasterCard, who own, 75% of the credit card economy, definitely they want you to go and use their products because then they get a cut of everything. So the banks get a cut of everything that every time you use a debit or a credit card or anything like that. So yeah, that's the function of cash. we need to hold on to our cash. We can't give that up or look at Greece.
Now, you talked about earlier in the interview about the next money system, and I'd like to discuss that because you're saying that the government is not ready yet. I mean, what does this look like? What is the next money system in your mind?
Well, and it's the money standard, but there's really no doubt in my mind, but that it will be, cryptocurrency based on blockchain technology with a smart contract on top of that. So, I'd like to back up here because what I find is people don't really know what money is and don't really understand the function of money. We've been trained to think of it merely as a tool of barter. But anybody that's lived any length of time knows that that money system does not hold your wealth. So, through inflation, you lose value. But the original reason why we even created money was as a way to value labor and store any labor that you didn't need to use today for use in the future. And the goal was to hold that value so that the same amount of money down the road bought you the same amount of goods and services today as it did then. So that was the real. There are many others. Yes, it was a tool of barter and there are all sorts of things about it. But the single most important function of money is to store that labor for future use. Well, fiat money definitely doesn't do that. The moment you get a dollar in your pocket or in your checking account or wherever you put it, it begins to erode in value. So at the moment that you get it, it has the most value, and then over time it has less and less. And then that forces you into products created by the banks to try and keep pace with your loss of the value. The problem is, and the piece that people don't understand, and this is because of that nominal confusion part, and they knew this when they set up the system, they talked about it quite a bit. But if the foundation of how you hold your wealth is consistently declining in value, number one, that's the real trend. Is the value of the dollar is the real trend. You can look at it right here. This is just a 10-year graph on the dollar. Okay, this is the current graph of the dollar. So if what you hold inside of the system is not going up at the same pace that this is the dollar against other currencies. So this isn't even reflective of the purchasing power. Now you got a double whammy because you've got the dollar losing value against other currencies at the same time that its value in terms of purchasing power is eroding. But people don't look at that because they just look at the stock market going up or the other, whatever it is that they hold, and they go, oh, aren't we doing great? And they're completely missing the real trend, which is really what's going on with the currency and the central banks. And it's a function of whether or not they can keep control. So
now, when you talk about us moving, from our current monetary system to a new money standard, what do you mean by that?
Okay. Well, if they can get us comfortable with the cryptocurrencies, and that's the standard that they want, then that's just a button push, because right now in the current system, it takes an 18-month lag time when the central banks make a policy decision before they know whether or not it had the result. So that's what they want. They want to be able to push a button and have immediate results, and that's the money standard that they want, where now, today, we can still take those dollars out. Even though they're losing purchasing power, they're still maintaining your principal. So they've got to get rid of that. That's the same thing or a similar circumstance that they had when they changed us from a gold money standard that held your purchasing power intact to a paper or a fiat money standard based on debt that was designed to erode that. Well, now they want even more power. They want, Eric's going to cringe. I'm sorry. They want to hold all of your wealth. They want everything inside of the system so that they have direct control. That's the money standard that they want. One that they control 100% and you have no control over. Look at the population in Greece. They squeeze, they squeeze, they squeeze, and they squeeze some more. And when you get to a level where you are completely dependent on them, then you don't really have a whole lot of choice.
No, you're saying that cryptocurrencies, if I'm hearing you right, are going to kind of be the backing or so of this new currency system, but aren't cryptocurrencies like Bitcoin decentralized? So how are they going to make them? How is the government going to take control?
Well, it's an interesting thing about decentralization, and I've been doing a lot of work in that area. China's government is decentralized. So it just means that there's some power over here and there's some power over there, but it still goes through the central location. And with the cryptocurrencies, they're peer-to-peer, and they're touted as being anonymous and outside of the system. And yet when you look at the real truth of it, like this just came out yesterday on India, and India is a great test case for all of this because they definitely are taking their population cashless. And they were concerned about riots, so they just shut off the internet to maintain order. So it could be decentralized, and it is. I mean, in this case, it's peer-to-peer. But Octane, which is the one that I think that because you marry a Bitcoin or Ethereum with AC chain, and you end up with an SDR, and the SDR is that's the name of the IMF's, the International Monetary Fund's money that they created back in '69. And so everything would have to flow through that. So my personal opinion is that people don't really understand the system as well as they could. And, this is another one that just came out. Bitcoin is losing anonymity as IRS tracks Bitcoin with new blockchain analysis tools. So, all of the big banks, the central banks, the huge corporations, they're in this space. So do you really believe that everything is as free and that the central bankers would just give up their hold that they've had for hundreds of years on the money system? Because whoever controls the money system controls the whole system. So, yeah, I'm sorry. Here's another one. China, who is really spearheading this move, they just shut down some exchanges. That's not the first time that they've done it. So, I question seriously that it's as free and around the system and decentralized. There is a location. There will be a location. Right now, it benefits the central banks and the powers that be for people to move in that direction and get comfortable with it. But once they feel like they've gotten a critical mass comfortable with it, those rules can change in a heartbeat. And then if it's in the system, what do you do? And so what? You have it over here on this little zip drive that's out of the system. If it's illegal, it's still ether. It's ether. It's not real. So I think right now you have to definitely stay real.
Now, speaking of staying real and owning gold and silver, you've talked about the fundamental value of gold and silver and how really right now gold should be around $9,000 an ounce and silver around $600 an ounce. Can you tell us how you got those numbers?
Yes. You have to understand that the monetary system today, the fiat money system, is based upon debt. And when they do a reset, what they're really doing is resetting that mountain of debt. And so they do it. There's only one way that they've done it over 4,800 times over the last 5,000 years. And that is to take something that has no value, no intrinsic value, like dollars that are designed all based on that debt. But they take the fiat money and they revalue it against monetary gold that is all tangible. I mean, it is tangible. It's used across the entire economy, so there's always demand for it, and it is indestructible. So they revalue the gold against that. So an easy way to get you there, and I'm not going to get you to the penny, but it's just about getting you close. And by the way, you can do this with every single asset that there is, and you should. However, so you just take all of the debt that's been accumulated and use that as a proxy for all of the money that's been accumulated, because many governments do not publish that anymore, including ours. And you take all of the physical gold that exists. For me, I like to use the in-ground gold as well as the above-ground gold. And then you simply divide the debt, real simple, divide the debt by all the gold, and that will get you somewhere near fundamental value. Now, I have definitely heard of people talking about, well, there's gold in the Grand Canyon and there's gold there. Well, maybe there is. I mean, I can't prove it. I haven't seen any definitive data on it. But here's the thing about that. Even if there is more gold that we have not yet discovered, anything physical, there's a finite amount of it. It's a finite amount, whatever it is. And in my calculations, I pull that data off of the world debt clock from The Economist. So that just covers public debt. So when I come in at 9,000, or I think right now it's somewhere around 9,300 and like 625 on silver, something like that. But when I come out with those numbers, it's really, really, really conservative. It does not take into account the private debt that's held. It does not take into account all of those derivatives. So that's really conservative. Even if there is more gold out there that we don't know about, it's still really conservative. And that's how I get it. It's real simple. And you can do it with every asset, and I think everybody should.
And compared to, $1,300 gold right now and $17 silver, it seems like gold and silver are like a steal right now.
Well, they are. And, understanding what the fundamental value of any asset or instrument is, tells you whether something is overvalued, fairly valued, or undervalued. Therefore, do I want to buy it? Do I want to hold it? Do I want to liquidate it? And, even though I can't tell you the exact moment that shift is going to occur, about gold, that's how they do it. That's how they've done it forever. So even though I can't guarantee that that's going to happen again, I think that's our best shot, is based upon something that's happened 100% of the time.
All right. Well, Lynette Zang, thank you so much for joining us today. Before we let you go, did you want to share with our viewers where they can find you and any last thoughts you had?
Oh, absolutely. Well, you can always give us a call at ITM Trading at 888-696-4653. But really, what makes us different is that we actually have a strategy to position you to sustain your current standard of living while we are going through this reset, and then to be in position for the other side of it to generate income that you cannot outlive for the rest of your life, and then, dare I say it, perhaps even have a legacy that you can leave your heirs. And this strategy, we are on a mission to help people through this. This is part of our community. Everybody here, or most everybody here, has been here for a very, very long time. We all pay attention. We all care. We are all on a mission here, that's for sure. So we also have a wonderful YouTube channel where I do research reports every week, plus insider trading, and have conversations as well. So itmtrading.com is a good place to start, or put it in YouTube, ITM Trading, YouTube ITM Trading, and you'll find us.